SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at all the markets then, shall we, today? Just a bit of an overview. Obviously we've got the FOMC meeting today, and so we might expect a bit of volatility over the next couple of days. But to be honest, as far as I'm concerned, the markets are speaking louder than the old men at the moment, really. And I don't think, whatever it is that they say, unless it's something really dramatic, which I very much doubt it's going to be, is going to really change the overall direction of the way everything's going. And just to recap, the overall direction hasn't changed, since my video telling everybody that DXY is going to peak, and then literally the day that it peaked, I say, look, it's going to break down here, and then Bitcoin to go bullish, Bitcoin bullish, rally is going to be starting, just be patient, short the dollar, long everything else. It's all the same, everything bounced 2.0, it's all the same. I know sometimes this can be like annoying. I get a lot of people saying, DMing me saying, what happened about the, is it still, yeah, it's still on. I'm talking weeklies and daily charts here. You've got to be patient, but the situation is very much the same. It's exactly the same. I told you it was going to peak around here. It peaked. And I don't think that the men around the table are going to be able to change it this time round, right? I think that we're going to go down on a weekly basis. I gave it between a 2 to 6 week period to meet its destination, which as far as I'm concerned is this 50 exponential. You've heard it all before, but if you've not subscribed to the channel, you might as well. That way you will be on top, without me having to repeat myself every single time. I appreciate a lot of my viewers are already subscribed, to be fair, so they're loyal subscribers to the channel. They obviously come back for a reason. But for those of you who aren't, you might as well treat yourself, I don't know how many other people spotted the absolute top to the DXY and as a result crushed all the other markets. I don't know how many other people you follow that have done that, but that's what we've done around here. And it's not for the first time either. It's not for the first time. We did this exactly the same bear market rally, everything bounce. Originally back in the summer, and everybody was saying, what are you doing buying altcoins at this exact level? I say, because I'll tell you why, it's because it's the absolute low, that's why. Thank you very much, good night. Right, so let's have a look at the overall market. So yeah, DXY doing its thing. Yeah, whatever the old men say, it's just going to add volatility. It's not going to change the direction as far as I'm concerned. Yeah, we're going to probably catch a bounce around 108.7. Bollinger Band Center backed up by a 21 exponential, but that as well is most likely going to break down back down to the 50 exponential. And then we might be able to talk about a dollar recovering back up to the top of the range. But for the moment, the top is certainly in. And I really don't think that any FOMC meeting is going to change that. I think that the charts are speaking, the markets are speaking now. Right, so with that said, let's have a look at some of the internal workings of that DXY, starting with the euro. So the euro in its uptrend, this is high, 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 low. This is an ascending triangle, and this is one that I think is going to break parity, being the top for it so far. Getting picked up so far before we reach the 98. So the bull's stepping in before major level of support here. So that's bullish. I know. It is what it is. It's high, low, high, low, high, 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 high. It's all good stuff. And yeah, we're going to revisit parity, maybe even today. But certainly this week, it looks very likely we'll revisit parity, and maybe from that area we break to between 1.2 to maybe 1.6 or 7. I know it sounds crazy, but that's the deal. And maybe at that stage, then we start to break down again. Look, the euro is in trouble. All currencies are in trouble. It stands to reason that we do break down again over time, but for the moment that's not what wants to happen. Same with the Japanese yen. So this is an inverse chart, so we're thinking of shorting this, as we would be shorting the dollar for the yen. So yeah, we had a decent rally here, picked up on the 200 exponential on this 4 hourly, and we had a really decent run, to be honest with you, for the dollar. Again, yeah, the Japanese yen being pretty weak, you can just stand back and admire the weakness, really. It's not much different to any other chart, to be fair. So far, we found ourselves a top around this level, which is more or less the dancing around area around here, and we're getting support on the Bollinger Band Center and this major area of support. So Again, if we break down from here, we go back down to our previous lows and probably lower. So, you know, I'm not suggesting short this level or anything like that. No, I wouldn't say do that, to be fair, because this is currently, you know, it's toying with the idea of recovering. But this is just one currency, it's just the Japanese yen. It's toying with the idea of continuing with the rally until we break down below this area here, which is 147. And just briefly look at some commodities. So gold, people are pretty scared about gold at the moment, yeah, because we broke down from this a while back now. I wouldn't be particularly worried about gold either. I think gold has been kept down for some kind of weird secret reason. I don't know why, to be fair, because it should be moving up with the dollar weakness, and I think it is going to. For whatever reason, though, I can't really explain. I'm slightly surprised by it. We continued to break down the end of last week. Now today we're picking our socks up again, slowly but surely recovering yesterday's losses, but we're still in a bit of a tricky situation as far as the chart is concerned. Below all major moving averages basically on a daily. It's not a good look. Can't really get particularly majorly bullish until we at least reclaim the Bollinger Band Center, which has got a downward slope on it. So yeah, this is weird. It's weird to see, and I can't really explain it, to be honest with you, because it's not what I'd expect to see. But with the dollar weakness, I think it will transfer over to this chart. So for those who are extremely bearish on gold for whatever reason, I think that sentiment is misplaced, to be honest with you. I think we're most likely going to move up through default by using dollar weakness as gold strength, despite the chart, you know, really looking like it wants to move back into this zone, which for me would be a buy and a long. There's a zone. It's not a flat area, but it is a zone. Bottom area being 1533 and the top area being 1584, so just below 16. So layering into longs, if we do get down to that area, would be I think it would be an appropriate decision for what is most likely going to come as a larger reversal over time to new all-time highs. Pretty bullish on gold, why wouldn't you be? But yeah, I mean, it's not a great looking chart on its own right now. If you were to look at this chart alone, you wouldn't be particularly bullish on it. I appreciate that, but this is why we have this overview before you even look at crypto. I know it's boring, but it's unfortunately this is how we're going to have to play crypto at the moment. Checking the overall environment for stocks, commodities, forex. Not that we're even looking at stocks. You don't need to. They're quite bullish, to be honest. But commodities and forex are they're quite important. And the last thing we'll look at before crypto, because I know that's what we all want, is oil. And oil still working on its move back up to 93 and beyond. So falling wedge, breakout, falling wedge, breakout. The destination is 93. Again, dollar weakness is going to help move this back up, and I think this time round, you know, we're looking to break 93 and move up to the holy grail of 104 to 105, and then maybe a new all-time high from there. Who the hell even knows these days? But that's what this chart suggests. So if you match a bullish chart with a bearish Dixie, it's a perfect storm. So I'm quite up for this to move. So let's talk about bullish charts then, shall we? Let's move over to Bitcoin here on the weekly. We're tapping away at this 20 weekly. So it's a Bollinger Band Center on a weekly. It's a turning point for it, basically. It's a turning point. Breaking above here, especially after what would appear to be quite a long sideways period of what might, in months, years down the line, be quite a clear accumulation period, maybe, for Bitcoin at these lower levels. Not that I'm suggesting the bottom's in. We can't say that with any degree of certainty. But if we I suppose a year from now look back and go, oh yeah, of course the bottom was in. Of course the bottom was in. There's still a very good risk of a capitulation in all markets. We are choosing to interpret, or I am choosing to interpret this as an everything bounce 2.0, not a recovery. So just like we got the everything bounce 1.0 back in June, for stocks and everything basically apart from commodities, this is an everything bounce. So it's not the recovery. We treat it like a bear market rally, but the difference this time is that we've crept out of this descending triangle, meaning that this could be looking at a breakout. So there is a chance that the bottom is in, but to stick my neck out and say that that's definitely the case when I know that there's all these other factors at play, which is why we always now look at forex, commodities, stocks as well as crypto, because it's all very much tied together, more than it ever has been basically. basically. It would be foolish to say that, yeah, this is a breakout that's going to go onto a measured move of a new all-time high, and it basically means a new bull market, basically. It would be silly for me to say that, but there are reasons to think that that's the case. We're now in the month of November, the most likely month to have formed a bottom and a new bull market begin. As far as time cycle is concerned, that is the most likely month. This is it, to be fair. If Bitcoin forms a bottom, it should be in by the end of this month. You know, December at the very latest, but anywhere from September to December, and all my analysis points to sort of like early mid-November, really. So yeah, you can get excited about that, but for the moment we're still pushing that for 20 weekly. Once that breaks, I think we make a move straight up to around 23, 24, which is where these bigger moving averages of significance are. 200 exponential, 200 simple moving average, Bollinger Band top, all on a weekly. I think we go straight up there, to be honest with you. And that's likely going to carry crypto with it through association, but the move is being done almost uniquely by Bitcoin. Ethereum is basically mimicking Bitcoin, as it usually does, and emphasizing those moves. But I would really look at the Bitcoin chart to gauge any kind of major move within crypto. And if there is no setup on the altcoin that you're looking at, then you might get lucky and it might move through association with the market. It might not. If you want to trade crypto, you trade the charts with the setups and ones without the setups. So I always have Jasmy here sitting on the side here, because this one didn't have a setup, but it decided just to do a powerful move nonetheless. I have no real explanation as to why it did it. I know people are asking me, I thought you said Jasmy didn't. Yeah, I stand by it. I can't trade a chart with no setup. I like to trade charts based on signals and setups. So if I don't have them, then it's like, you know, a very expensive lottery ticket, really. And I can't explain the Jasmy move, but you know, it's doing its thing. I still have a little bit of it. But it's not a trade. It's just some residue of Jasmy that I've had from previous trades. But yeah, I can't explain that, but this is an example of how certain coins, as best as I can explain, certain coins will move when the market moves. Jasmy does explosive moves for whatever reason, but you don't want to get stuck in the wrong side of a chart that looks like this, and this is just a small portion of the chart. It did, if you go to Gate.io with a higher term time frames, it was actually, once upon a time, it was sitting around $6. So yeah, it's a terrible chart, but it does have opportunity, but I can't explain why it did its thing. But yeah, long story short, Bitcoin working on moving up. So this is a consolidation. We've moved down into the 50 exponential, still part of the golden cross. It's very bullish to be bought back at 20,000 on that last dip here, 20,000 on the dot. We made another higher low here, but also a 50 exponential moving average, which is still trending up. I have no problem expecting higher highs and higher lows to continue with Bitcoin. Still on the daily, no buy signal in play or anything like that, but momentum still seems reasonable to me. We're coming out of a consolidation after this first move up now, or this second move up, and I think the next move up is going to take us way beyond, you know, into the 23 to 24,000, and that again should transfer onto other cryptos. One coin I've been focused on for a little while is eGold. You know, we toyed with the idea of a pump signal generated yesterday. What we're looking for is a Chiku span to close outside of the cloud on a daily. So hopefully that'll happen today, and if that's the case, then we'll be looking at the pump signal. Some people ask me, you know, DM me or whatever on the Telegram about this. Say, what is the signal still in play? But there is no signal here. What we see is a decent trend, a relatively strong trend, pushing the resistance, and as far as we can see, really, we just extend this. We've closed above the resistance now. So whether you're treating it based upon a breakout of this is one thing, or if you want to get the extra sweetener, which would be a pump signal, then that would be a signal. But at the moment, it's just a strong trend looking to that's been, I suppose, consolidating at a higher level, looking to break this area. So I'd be in favour of this moving up anyway, but I'd definitely be in favour of it if we get this pump signal generated tonight. Again, it's on a daily, so don't expect it to play out straight away. It can play out straight away, but it doesn't have to. Doesn't have to at all. So overall, the same analysis from, you know, these last couple of weeks still applies. I still expect it to all continue the way it's going to do, which is that Dixie down, everything else up. So short the dollar, long everything else. You know, again, you know, I'm not asking you to long or take positions in anything. The time to have done that would have been right back to, was it 11-12 days ago, when I said that the dollar is going to peak and we're moving into an everything bounce 2.0. That was the time to really get some positions. Now what we're looking at is the second second wind of this now that we've, I suppose, dug our heels into the idea that there is strength now in markets and weakness in dollar, and we go for, I suppose, the safer, more, I suppose, reliable move back up. So rather than catching the absolute low on everything, like we did just 11-12 days ago, now we take part in the trend, which again, you know, for anyone who's new to trading or learning trading, catching absolute bottoms, absolute tops is a rare event, to be honest with you. It doesn't happen very often. It takes a lot of work really to break the, you know, to navigate the market you're focused on, especially now when everything's tied together. So it's not a common event catching the absolute low on certain things like that. Again, we've only done it twice this year, and this has been a bear market as well, so it has been extremely difficult to do. But yeah, it's not a common event. For those of you who are learning trading or new to trading or still, you know, getting to grips with it, the most obvious and most easy way to make money is to take part in a trend, and as far as I can see now, a trend has formed, and we'll be looking to take part of this trend, and the trend is basically forming higher highs and higher lows, and we're about to start to make a new higher high on basically Bitcoin, but most crypto as well, stocks, and most commodities. I still think gold is a bit of a wild card, but I would be surprised if it did break down to those levels of significance based upon dollar weakness. Anyway, there's a lot of information for you there, but like I say, that's the overall way to navigate this market right now when everything is so heavily correlated to itself. It's not as easy as just looking at a Bitcoin chart or an altcoin chart. You really do have to look at the entire stack of dominoes that are lined up next to each other. And I know that the FOMC meeting is going to cause some ripples within the markets. That's fine, but I really think that the markets are stronger now than the old men at the table. And so unless they do something crazy like 100% basis point or a 1% increase in rates, I don't think the markets are going to even sneeze too hard in the face of whatever it is they decide to do now. I think the markets have spoken and the direction is pretty clear. We're going to continue with this bear market rally until we reach those areas on the Dixie chart, which is basically 50 exponential. So we've still got a fair bit of time and destination to go. So I'm in favour of further upside across the board for pretty much everything. That's a sweeping statement, so don't just buy the shittest thing you've ever seen in your life just because I call it the everything bounce. But for those of you who understand what it is that I'm trying to explain here, you know what I'm talking about. Strong charts are the ones that you want to be playing anyway, especially the ones with decent setups or signals as well, sweeteners basically. Don't just buy everything or anything. Still apply correct analysis over the chart that it is that you're looking to trade. But I think with the dollar weakness, most things should benefit from that by default. Anyway, thank you for watching. I hope you have a nice day. Maybe I'll see you on the live stream tonight. And take it easy.